Welcome to the Plan B show, and this is the final episode with Srinath Sridharan of the Observer Research Foundation and an independent markets commentator. And today we have a closing beat on the general economy and not banking. So, when it comes to economy, we talk about the most important factor, which is upside demand. Srini, what do you think the government can do this year to boost up demand, which has already been facing very low surge over the last 1 year?
So last 1 year we had the volatility of economy about the spends. I think this time government can upfront their expenditure. Capex cycle can be front loaded. But more importantly, the government should actually go out and ensure that cash flows pass through their various departments and ministries. And that's how only way the money will flow to the various vendors, various companies which work with them, and in the end, the consumers and the people who are working for those projects. So upfront government expenses with ensured guaranteed cash flows.
Okay.
Two, can the government actually kickstart the capex cycle with the other domestic investors, which means the capitalists and the industrialists, with clear conversation of saying that can we put together something like short term, next 3 years, whatever they invest in, it's almost like a tax holiday or a kind of tax break can be given to the domestic industries. But with clear intent that job creation must happen within a certain limited time. Which means you're not going to take benefit and wait, delay the project for 6 years and then no job gets created. Can you do short-term job creation projects? And I think there will be some ideas which will come up from the Indian entrepreneurs and the Indian capitalists. I'm sure the industrial captains across India who built business empires over the point in time have enough ideas, but it's about putting the money on the table.
Okay.
Three, I think from the government side, there's been a lot of expectation of the taxes. And if you look at the taxes, we've had plethora of conversation right from a wealth tax to a distribution tax to inheritance tax. If you leave all that aside, but the fact is taxation, we are already on the personal taxes front. I think government has some way or headway to maneuver. But on the corporate taxes front, not really, not too much. But I do anticipate that since we're all expecting this to be almost like a COVID-friendly budget, some inclusion projects the governments could announce saying that where they would help the poor, they would help the downtrodden, the economically weaker sections of the population. But I hope it is not at the cost of punishing the wealth creators, because we need our wealth creators to create more wealth, and we'll have to find a way of taxing it and distributing.
No, but Shri, like you mentioned, we need to create more jobs and we need not be punishing wealth creators. Usually what our history has suggested, these things do not go hand on hand when it comes to practical experiences. I'm not talking about the paper references. Do you think there will be some direct taxation cutting and income tax rebates from the government? That's one. Second, when you talk about not troubling wealth creators and encouraging entrepreneurs, what is that big policy announcement you might expect from the government? Will it be cascading of taxes aversion when it comes to startup taxes, or it could be rebates to startups? What is that policy announcement which you might expect from the government this year?
See, let's look at one example. The ITS industry 20 years ago grew on the back of some of the tax holidays that were given to them, and they were able to create jobs and there was skilled talent and the knowledge workers who grew in that space. So similarly, in the startup economy, it should not be only benefiting the investors per se, it should also cascade down to the consumers. Startup economy can increase demand and supply on either side. It's not just about replacing the conventional distribution channels. It is also building on them. And can we do something there? That's one. Two is the notional wealth. Let's be very clear. In the startup economy, because of the valuation cycle that people go through, it's a notional wealth. It is only notionally valued at something. It is not actual cash that is translating for 100% sale unless such an M&A happens. So we have to be very cautious. While people speak about how do we tax the notional wealth and tax gain or the wealth gain, I shudder to think, why should I be taxed for unrealized gain? If I've actually invested 100 and made 10,000, and over a period of time after indexation, you charge me for it. Whatever is the tax, you tax me. But if I invested 100 and notionally it valued at 1,000, you cannot tax me for that gain of 900 because I have not realized that gain. And this is where I'm very cautious, because there's a huge euphoria in the market to go out and say, let's tax unrealized gains.
And this is something which what Shini is referring to, tax hounding by the income tax department, which happened a couple of years ago against some startups as far as the valuations are concerned. A lot of accounts were freezed. Do you think the government should worry about fiscal deficit this year, or should it let this year be a bygone as far as the fiscal space of the government is concerned?
No, I don't think we should worry unnecessarily about fiscal deficit at all. I think now it is the time as the sentiments come back to positive or near positive. Some of the sectors are seeing pre-COVID demand levels. So how do we build on that? The worry is we don't want to cater only to the pent-up demand. It has to be sustainable demand, and there has to be some measure to ascertain this. So if I were the government, my request to the government would be very, very simple. Continue doing what you're doing. Let's not unduly worry about fiscal deficit. And the challenge is almost there are thousands and 10,000s of commentators like me or analysts like me who will have a view. And the actual data for me, the data that none of the media is privy to, would be the actual GST collections data. If we are collecting 1 lakh crore on a monthly basis, I'm sure the GST Council or the body which collects GSTN definitely knows which are the industries which have seen demand, which are the ones collection where it has spiked. Let's say 3,000 crore coming from cement, 1,000 crore coming from retail sector. I'm just giving a number. Can they devise specific plans to, one, encourage that sustenance of that demand or that payment? And two, can we figure out incentives for some of those sectors where it can be fast track demand without creating an artificial shortage? Which means that if you see consistently an industry which is paying GST and you see a demand there, it is direct correlation. What can you do to encourage it? And that data is not public data at all. While we have the data from RBI for various numbers, the GST collection by the industry, by segments, is not public data. And I'm sure the policymakers who have that would benefit from using that data for various analysis.
So focus on the GST collections. Do not hound the entrepreneurs. Invade them less with tax as a weapon, and focus on job creation to spur up demand. That is the summation of this conversation. Thank you, Srini, so much for joining us.